Welcome to the Explainer. If you're watching the crypto market right now, you can just feel the tension in the air. So is Bitcoin about to take a nosedive, or is it coiling up for its next massive rally? Well, today, we're going to break down three kind of conflicting views to figure out what's really going on.
All right, let's just jump right in. The crypto space? It is totally split down the middle. You've got one camp screaming, buy the dip, we're going to the moon. And the other is just bracing for impact, warning of a huge correction. So, who's right? Well, the thing is, the answer really depends on how you look at it. We're going to look at this through three different lenses: the short-term trader, the macro analyst, and the long-term market theorist. Okay, first step, let's put on our day trader hat. We're going to zoom all the way in looking at those hourly charts. What are the signals that traders are glued to right this second to decide their very next move? So right now, the entire short-term story, it really boils down to one single line on the chart, the 50-day EMA. Honestly, you can think of it like a battlefield line. Traders, like Annie from Trade Travel Chill, they're just watching to see if Bitcoin's price can hold this line. If it holds, great, the bulls are winning. But if it breaks below, yeah, you gotta watch out.
And this isn't just some simple up or down guess. It's more like a strategic conditional plan. The thinking goes something like this. Bitcoin might get a little bounce first, right? Maybe it hits a wall of resistance around that 120K mark. Now, if it looks weak there, that could be the signal that a much bigger drop is on the way, maybe all the way down to 107K. And here's the crazy part. That big drop might be the exact reset the market needs before it can take off for its next huge leg up.
So the big question is, how do you know if the bottom is actually in? Well, for traders, they're looking for a very specific pattern on that 1-hour chart. It's called a W formation, and you can think of it like a big green light. It's a clear confirmation that the downtrend is running out of steam and the buyers are finally stepping back in with some real force. And this really gets to the crucial point from a short-term perspective: patience. You gotta have patience. See, the market is technically still in a downtrend until it proves otherwise. So blindly buying every little dip without seeing a real structural shift like that W formation, well, that's not trading. That's just gambling. Okay, so the traders are telling us to be patient, wait for a signal. Got it. But what happens if we zoom out from those hour-by-hour charts and, look at the calendar instead? Well, the bigger picture starts to tell a very different and maybe even a more worrying story.
Analyst Benjamin Cowan points out this really powerful historical trend. Get this, in every single post-halving cycle, we're talking 2013, 2017, and 2021, September has been a down month for Bitcoin, a red month. It's a seasonal pattern that is just so consistent, it's hard to ignore. And it suggests we could be in for a bumpy few weeks.
And look, this isn't just some random coincidence on a chart. There's a potential macroeconomic reason behind it. A Federal Reserve rate cut is expected this September. Now, you'd think, hey, rate cuts, that's good for markets, right? But it can have this kind of weird side effect. Sometimes it makes safer investments, like government bonds, look a lot more attractive. And when that happens, money often flows out of those high-risk assets, like Bitcoin.
And this right here, this illustrates the real danger for the rest of the market. A September dip might just be a 5 or 6% drop for Bitcoin. Annoying, but not the end of the world. But that same small move for Bitcoin could trigger an absolutely catastrophic 30 to 50% crash for the altcoin market. I mean, the stakes here are incredibly high.
Okay, wow. So the short-term view and the mid-term view are both kind of flashing these big red warning signs. But what if that dip is exactly what the market has been waiting for? That is the powerful argument coming from big institutions like Coinbase, who see this whole thing not as a risk, but as the potential launchpad for an absolutely explosive altcoin season.
See, their bullish case has pretty much nothing to do with daily chart patterns. No, instead, they're looking at three huge underlying global trends that they believe are all about to line up perfectly. Let's break them down one by one.
First factor, you just got to follow the money. It's pretty simple, really. The total amount of money flowing through the global financial system, the M2 money supply, it's on the rise again. And if you look back, Bitcoin's price has historically followed that exact trend, just with about a 12-week lag. Now, if that pattern holds true this time, some projections see that pulling Bitcoin all the way up towards $150,000.
All right, factor number 2 is all about investor confidence. As the broader economy gets healthier, investors just tend to get a little bit bolder, right? They start moving their money from safer bets into things with higher risk but also higher potential reward. And altcoins, they are the perfect example of that. That risk-on appetite is the exact fuel you need for a major altcoin rally.
And finally, factor number 3, Bitcoin dominance. We're actually starting to see Bitcoin's share of the total crypto market begin to fall. Now, this is a classic textbook signal that a big rotation of capital is starting. Investors are taking profits from their Bitcoin gains and they're pouring that money into smaller altcoins, all hoping to catch the next massive wave.
So the question is, are we in an altcoin season right now? Well, not officially. There's actually an index that measures this, and a true season is said to start when 75% of the top altcoins have outperformed Bitcoin over the last 90 days. Right now, we're sitting at 40%, but here's the key thing. The trend is moving up. It is climbing. You can feel it. The engine is definitely revving up.
Okay, so let's recap. We've got a trader telling us to wait on the sidelines. We've got a historian telling us to be careful in September, and we've got a major institution telling us to get ready for launch. So how on earth can all three of them be right? In our final section, let's try and put all these puzzle pieces together.
You know, when you actually lay it all out like this, you realize something absolutely crucial. These aren't really contradictions at all. They're just different zoom levels. The trader, they're looking at the next few days. The analyst is looking at the next few weeks. And that institutional theorist, they're looking at the next few months.
And this right here is the key takeaway. What if the bearish short-term view is actually the catalyst for the bullish long-term outcome? Think about it. That dip to 107K, that red September, that could be the very market shakeout that's needed to flush out all the weekends and provide the liquidity, the fuel for that explosive altcoin season that Coinbase is predicting. It's a dip before the rip.
So that leaves us with one final thought to chew on. Maybe the most important question isn't who's right and who's wrong. Maybe it's how do all these different pieces fit together into one big story? It's entirely possible that we're just watching different chapters of the same book, where a painful short-term dip is simply the prologue to an absolutely incredible rally.